Taking a look at the energy markets today, I want to focus on WTI crude. WTI crude came under some selling pressure throughout the session. We saw it higher initially, but then some selling pressure throughout the day. I think couple that with the fact that we saw some moderation in the equity markets, and I think last week we saw some moderation in WTI as well, that it's not surprising to see maybe a little bit of a give up here after the recent run up, particularly when we saw early last week. WTI right around the 59.58 level to settle the session. We saw a high of 60.92 and a low of 59.35. So we did break back below that $60 psychological level, but there's not too much technical damage that has been done to this point. So I'm looking at some of the driving factors here, and I think it's very interesting when you see the price movement today between WTI and Brent. It does appear that some risk premium was put into WTI over the weekend. Concerns about the tropical storm Harry, I believe, didn't really manifest themselves. We did see a lot of production come offline on Sunday, but then back on the market today. So the disruption wasn't nearly as significant as what the market probably was possibly anticipating. So I think that's why you're seeing that spread widen as we see WTI selling off more significantly than Brent today. Also, looking at it from a technical standpoint, as I mentioned, 59.35, I think that's that level where you saw the end of June highs, and then that's some support there, and we're going down here testing that support. But I do expect that, outside of anything, outside of expectations being disrupted in the marketplace, that this should be a level where you should see some support here from a technical standpoint. The uptrend still in place from those June lows, and nonetheless giving up some ground here, but some support from those the June highs before we saw a little dip in early July, right around the 59.35 level. And then moving into the data this week, I think it's important to focus on the data. We have a lot of data coming out throughout the week. Earnings definitely from the equity side, but when you look at the data for the crude space, the API number and the EIA number, I think are going to be very important this week, more so than in past weeks, primarily because we've seen a significant trend developed in the last 2 weeks, and that's much larger draws than anticipated. And I think that if that continues, you would expect that that's going to provide some support for WTI moving forward. If we continue to see drawdowns in the inventory, pushing those inventories lower, and particularly with the production situation, we're seeing slower production coming out of OPEC, but also we're seeing, as Bob pointed out Friday, the rig counts being reined in here in the United States, and production kind of topping off for the time being in the U.S. So again, if we see those inventories come under some more significant draws, I would expect that that would be a catalyst to continue to keep this uptrend in place for the crude space.